How's it going, guys? It's Doc. Bitcoin is setting up for a super bullish Q1. All the narratives are there from both a technical analysis perspective, which we're going to go over in this video, and from a cyclical point of view with Bitcoin's 4-year cycle. We got a lot of events lined up for both this week and the next couple weeks. But before we get started, welcome back to the channel. For those that are new here, my name's Doc. I'm a resident physician throughout the day, and at night, I take you on my crypto and investing journey. Guys, we got a ton of charts to talk about here today. I'm going to break it all down for you, make it super easy to digest, and let's just go ahead and get started right now. Okay, so we are looking at Bitcoin here on the daily chart. We've been talking about this channel for the past couple of weeks, and we finally broke out of it. So now we can get some price discovery. This right here, this single candle is going to lead to a lot of bullish events. And when I was making this video, I was like doing the prep to start this video. I was so excited to bring up all these charts. Guys, I have about 15 tabs open. Like, there is some really, really cool stuff that's going to be happening here. I'm excited to show you guys them. If you guys get any value out of this, consider giving me a like and a follow. Okay, so here's Bitcoin. We just talked on the daily, having a nice breakout. And what is this doing for total 3? Total 3 is the entire crypto market, excluding Bitcoin and Ethereum. So we had this descending triangle here for the past, I would say probably 2 or 3 weeks. We finally broke out of that in a meaningful way within the past couple days. So we're breaking out of this. Bitcoin dominance is increasing though, right? So that means our alts are getting hurt. So for those that are new and don't kind of understand Bitcoin dominance is how much of the entire cryptocurrency market is taken up by Bitcoin, right? Bitcoin's our North Star. And right now it's at 57%. On a weekly view, and I've been tracking this every week, we finally got a close below the bull market support band. So that's super bullish. Yes, right now we're coming back up to test the bull market support band. I really think that this is going to drop the Bitcoin dominance here within the next couple days, and I'm going to explain why shortly. Guys, stay towards the end of the video. I'm going to show you my absolute favorite chart at the end of the video, and I'm hoping it's going to get you guys pumped up. Okay, we're going to start off here. This is super interesting. And here we're going to talk about how Bitcoin is really displaying this cyclical view. So let's take a look back here. Summer 2023. Bitcoin, let's just zoom in. Bitcoin falls below its bull market support band, okay? And if you were here in summer 2023, this was kind of a tough time, right? The ETFs weren't approved yet, and we fell below, although just for a little bit, below the Bitcoin, the bull market support band, and then we rocketed up, right? We had this big rally up, and then we kind of chopped sideways, and this was December, January, okay? So we're chopping sideways, December, January, and then we have this huge bull parabolic move up Q1 of 2023, okay? Then summer of 2024, long chop sideways. This was time capitulation. This was a tough time to be in the market last summer, right? So we had this sideways chop, and then we have this big run up, okay? Big run up, and now we're chopping sideways. This big run up, by the way, was Trump winning the election. Now we're back in December, January, and we're kind of in this sideways chop again. Well, history doesn't repeat itself, but it sure does rhyme. And if we can get this same Q1 rally that we had in 2023, this would make for a super bullish Q1 2024 and could put us up into the high 120s. I would not be surprised if we hit 120,000 within the next month. And this last chart that I'm going to show you is going to kind of build that thesis out. So history repeats itself, guys. 2023 into 2024, it's really repeating, right? It is very similar. And we're going to go and show that here with the Bitcoin ROI. So this is Bitcoin market cycle bottom ROI. This measures the ROI from the bottom. And this is showing the green is cycle 4, the orange is cycle 3, and then the pink is the current cycle. Guys, we are right on track. We always want to say, oh, this time's different, because of the ETFs, our nation states. This time is not different. We are following from a cyclical point of view, we're right on track. We are right on track, guys. We're slightly below actually the prior two cycles. So if we end this cycle like we did the prior two cycles, we are in super, super bullish territory. Okay, so we talked about how 2023 is really similar to 2024. Well, now I want to make the argument maybe last time President Trump took office, maybe that's going to repeat, right? We just said 2023, 2024 similar. Well, maybe let's draw a comparison between end of 2016 and 2017, right? So this yellow line is when President Trump takes office for the first time. And you guys all see we had a parabolic rally, right? We're right around $700 or $800 when Trump takes office. And at the very peak, we hit out to 18 or 19,000. It depends where you draw the wick because this is a monthly candle, but it was about 20,000. So over a 20x, a 25x when President Trump took office. Now, I'm not expecting a 25x when President Trump takes office here, but I drew this little line here. I wouldn't be surprised if we got into the high hundreds, high 180s, 190s, maybe crack 200. You guys let me know below. Would you guys be surprised if we hit 180s, 190s, 200s by the end of this cycle? I'm genuinely curious. I read all the comments. Let me know what you think down below. Okay, so we said Bitcoin having a good little day, right? A nice bump up. And all of crypto's kind of looking like that too, right? We got a lot of green here. Wilder World is up 15%. AI 16Z is up 26%, having a really, really good day. SPX is up. Sand is up. One of my favorite platforms, AVAX. This is going to, guys, I'm telling you, AVAX is going to blow this cycle. Alex Becker just talked about it briefly on his video yesterday. AVAX is going to do really, really good this year. Okay, so why is all of crypto going up? There's a couple different reasons, but the big one that people are thinking is the dollar, the Dixie. We need the dollar to show weakness before we can get our altcoin season rally. So the dollar and Bitcoin, they have an inverse relationship. And I can actually try to show that here just to build a little bit of a narrative. It's not perfect. Yeah, this isn't gonna line up perfectly. But historically, Bitcoin and the dollar, they have inverse relationships. So we need the dollar to continue to fall. Just to put this into perspective, the dollar was not doing great. Look where the dollar was. Of course, I'm on the daily chart. I want the monthly. March, right? We all know what happened in March. The dollar was not doing as well, right? This is March. And this is when altcoins were running, right? We saw this big jump down in the dollar. And that's what led to our mid-cycle top in altcoins. Now Bitcoin's way up. And that makes sense because, guys, dominance is now up, right? Look how much dominance has run since then. So we need the dollar to continue to fall down, right? As the dollar falls, dominance will also go down. And that means our altcoin seasons are going to run. So this is one reason the Dixie or the US dollar falling down, why Bitcoin's up. Well, what's the other reason? Because surely it just can't be that. It's China, right? Oh, my bad here. This is just a quick tweet on, Trump saying that the Dixie drops on tariff news. Okay, but the other narrative is China. China's bonds are absolutely collapsing. And I'm going to show you guys why this is important. Don't let this confuse you. It's actually really easy. I'm going to break it down. That's why you subscribe to me, because I try to make this news very, very applicable and easy to digest. So China is going to inject a ton of liquidity as a last-ditch effort to stimulate their economy, right? This is China's 10-year bond rates, and they are absolutely falling. This is actually historic lows. They've never been this low. So if we look at this tweet here, they're in this death spiral. Today, China's 10-year yield on their bonds fell below 1.6% for the first time in history. And it kind of shows this here. This is the same picture that we're looking at. This is China's 10-year bond yields, absolutely in the shitter. It's tanking, right? So this is really important because the only way that China is going to get out of their horrible economic position right now is to print money, right? They're reducing their 10-year bond rates because this is in essence them reducing their overall federal funding rate because they have a ton of debt that they need to fund. So they're going to drop their interest rates and they're going to print a truckload of money. They're going to print a truckload of money for a couple reasons, but one big reason that people are speculating is because China could be beating Trump to a strategic Bitcoin reserve. So this was published on Forbes just a couple days ago, and they say a ton of interesting stuff. Scaramucci, he says, I think China is already acquiring Bitcoin, right? This is from Scaramucci. He goes on to say that, yeah, I think Trump is going to create a strategic Bitcoin reserve, right? And it only makes sense, guys. It's not a matter of if, it's a matter of when. China's likely doing it out of desperation because they need to fund all of their debt. Trump campaigned on doing a strategic Bitcoin reserve, right? So we know this is likely to happen. But guess what? We're not in much of a different position than China. You guys all know Clear Value Tax. This is a video that he actually published today. You know him, right? He's got over 2.4 million followers. He's saying that the US, we're in a debt crisis ourselves, right? We are printing money at a stupid rate. I really like this graphic that he shows here. Okay. This is how big of a deficit we're running every year. So obviously in 2020, when the pandemic hit, we were in over a $3 trillion deficit, right? Every year, the US is in a bigger deficit, right? We are losing money every year. So in 2022, we're in a deficit of 1.38 trillion, then 1.68 trillion, and now this last year, 1.86 trillion. Guys, this is when unemployment rate is hitting historic lows. We should not be running deficits this large. And the tough thing is this is just irresponsible spending by the government. So hopefully when President-elect Trump comes in, him, Elon Musk, the DOGE, right, Department of Government Efficiency, they can start to reduce this deficit that we're having because this is just wild. This is out of control. We should not be running deficits this high. And the other wild thing is look, in 2000, we weren't running deficits. We had a surplus. And then obviously 9/11 happened. The 2008 financial crisis just started. And this was really bad. And in 2010, I'm actually reading the book right now, Lords of Easy Money. They talk about quantitative easing when this started in 2010. Super, super interesting read. I'll give you guys my review on it once I'm done. But the U.S. should not be running deficits of almost $2 trillion a year when unemployment rate is at historic lows. Okay, so let's pivot a little bit. What do we have to look forward to this week? So this is the economic calendar for the second week starting the second week of January. Tomorrow we have JOLTS openings. I'm not super excited about that. On Wednesday, I'm excited to look at the FOMC minutes. I'm going to go through the PDF. Give me a subscribe. I will break it all down for you in a video on Wednesday. Really what I'm looking for in the FOMC minutes is, does anybody hint at us being projected to start quantitative easing in the near future? Quantitative easing is when the Fed increases their balance sheet, right? So if we can actually look at it here. This is the US federal balance sheet. And we've just been decreasing our balance sheet over the past, 2 years. Yeah, since 2022, we've been reducing our balance sheet. Okay. This is known as quantitative tightening. Quantitative easing is when we increase the balance sheet like we did here with the pandemic. Okay. For alts to run, for us to have a true altcoin season, right, where all of your bags 2, 3, 4, 5, maybe even 10x within a few short months, we need quantitative easing. We need the US government to start putting assets back on their balance sheet. So that's what we're kind of looking at on Wednesday. I'm going to be following that. The big one is Friday, guys. The big one is absolutely Friday because we have the unemployment rate. Okay. The unemployment rate, we are 100% going to have some volatility on Friday based off what the unemployment rate does. And this chart right here, gosh, we got a lot of garbage on here. I'm going to try to erase. The only thing that I want you guys to look at here is the white line and Bitcoin. That's the only thing that's important here. Okay. Don't look at all this. This is just noise. Okay. So I'm going to build a little bit of a thesis that the unemployment rate, which is the white line, unemployment rate, white line, and Bitcoin are correlated. And just hear me out here. Okay. So here in the summer of 2023, this is in June, the unemployment rate increases, right? It goes up from roughly 3.5 to 3. And as it goes up, what does Bitcoin do? It kind of just fizzles out. Then the unemployment rate comes down a little bit. Bitcoin rallies, right? It's flat. Bitcoin rallies. Unemployment rate starts going up. Oh, we don't like that. This is the one that I thought was really gnarly. Look at how the unemployment rate increases from February 2024 up to July 2024. And Bitcoin just chops sideways. Well, I mean, it's going down, right? There's a slight down slope here. And obviously, the market doesn't like that. Then the unemployment rate comes down a little bit. We get a temporary spike right here, right? So that's good. And then we stay flat. So Bitcoin's chopping. This increase right here, this is all driven by Trump, okay? Or, him getting elected. The markets blew up that. So what we really need to say is, okay, we know unemployment rate data is coming out on Friday. We've shown here, there's a pretty strong correlation between unemployment rate, right? When an unemployment rate comes down, we get these temporary increases, and the opposite, right? When unemployment skyrockets up, Bitcoin trends down. The best way to kind of think of this is we're looking for unemployment data this Friday. So if the unemployment data right now, it's at 4.2, okay? 4.2, that's where we're currently at. This is since 2008, right? Obviously, unemployment spiked in the pandemic. If we just look the last couple of years, right now, we were at 4.3. We came down. We're at 4.2 right now. So if the unemployment rate hits 4.3 or higher, Bitcoin's going to dump, right? The market's not going to like that. It's going to scare the market, right? If we hit 4.3 or above, every legacy news outlet is going to say recession fears, do we have a looming recession? All risk assets, not just Bitcoin, tech stocks, the Russell 2000, which is historically built of more riskier stocks, it's going to dump. Now, the opposite is also true. If unemployment rate stays where it's at, 4.2, or it's less than 4.2%, Bitcoin's going to jump. Risk assets will jump, okay? So we're going to be watching this on Friday. I'm going to be covering it both on Twitter, and obviously I'm going to make a YouTube video. Follow me along. I'm going to make sure you guys have great information in a fast, reliable manner. So basically, I just kind of wrote this note here. The unemployment rate can kind of help guide the Fed on the number of rate cuts that we need and how fast, right? So don't get lost too much in the noise here. The last two charts that I want to show you are really exciting. We already kind of talked about this. We're right on track for where we need to be, guys. We're right on track. This cycle is not different, okay? This is my favorite chart. Let me paint the picture here. Right now, we've got this trend line going. And of course, it's not going to let me delete this. Okay, ignore that. We've got this trend line from Bitcoin, okay? If we continue to follow this trend, by January 20th, we would be on board to hit 120,000, right? So January 20th is right here. We'd be right on board for 120K if we follow this trend line, okay? So obviously, I'm going to be watching this. We're getting a nice pump into it. What is January 20th? Well, this is when President-elect Trump gets inaugurated. It could be bullish, right? It could signal to the market that we're ready to get this bull market rocking, right? Because Bitcoin doesn't need a reason to go up. it needs a reason to go down. So let's get this bullish momentum behind us. Let's pack our bags and get ready for an awesome altcoin season. This is me on YouTube, Invest with Doc. Consider giving me a follow. Guys, let me know what you think below. Do you agree with me? Do you think we're on board for a bullish Q1, Q2 2025 because of technical analysis, which we just showed is on point? It's setting up for a really bullish narrative, and the cyclical view, right? We showed the ROI from the bottom and how we're right on pace with all these other cycles. If you guys got any value out of this at all, consider giving me a like and subscribing to the channel, and I'll see you guys on my next one.